India is reshaping global oil markets with a dramatic shift in its energy strategy. In October 2025, the country's crude oil imports from the United States hit their highest level since 2022, reaching 540,000 barrels per day, according to data from maritime intelligence firm Crude as of October 27th. This surge represents a sharp jump from the year-to-date average of around 300,000 barrels per day. October is projected to close near 575,000 barrels per day, with November expected to average between 400,000 and 450,000 barrels per day. The increase is driven primarily by economics, not politics. A widening price gap between Brent and WTI crude has made American oil particularly attractive. Sluggish demand from China has further improved the arbitrage window for Indian refiners. WTI Midland oil became competitive on a delivered basis, creating a profitable opportunity that refiners couldn't ignore. But this story doesn't start in 2025. It begins in 2022, when Russia-Ukraine war transformed global energy flows. Before the war, Russia supplied just 2% of India's oil imports. In 2021, the United States held a 10% market share, supplying crude worth approximately $13 billion to India. Then, everything changed. Western sanctions on Russian oil created steep discounts, sometimes reaching $30 per barrel below market prices. India seized the opportunity. By 2022, Russian oil imports surged more than six-fold to 740,000 barrels per day. In 2023, imports nearly doubled again to almost 1.8 million barrels per day. Today, Russia remains India's largest crude supplier, accounting for roughly one-third of all imports. Iraq ranks second, followed by Saudi Arabia. This dramatic shift reduced India's dependence on Middle Eastern oil from 65% to around 55%. From April 2022 to May 2023, India saved at least $7.17 billion through discounted purchases. The country spent approximately $186.45 billion on Russian crude during this period, compared to what would have been $193.62 billion at market prices. The Trump administration imposed 50% tariffs on Indian goods, partly targeting Russian oil purchases. New sanctions on Russian oil giants Rosneft and Lukoil, which together account for about 60% of India's Russian imports, are tightening the screws. This is where American oil re-enters the picture. Indian refiners are booking more U.S. grades like WTI Midland and Mars to diversify their supply mix and signal cooperation with Washington. The move serves multiple purposes: reducing sanctions risk, easing trade tensions, and maintaining energy security. As the world's third-largest oil consumer, importing over 85% of its needs, India wields significant market power. Both Russia and the United States want to keep India as a customer, giving New Delhi leverage in a fractured global landscape. The country is pursuing what analysts call strategic autonomy, engaging with multiple suppliers to maximize national benefits. This approach prioritizes energy affordability and security over geopolitical alignment. What happens next depends on multiple variables: the sustainability of price differentials, the evolution of U.S.-India trade relations, and the effectiveness of sanctions on Russian oil. For more news and updates, keep watching Live Mint.